Hello, YouTube. I hope you are doing well. Now, I have a great news for each and every one of us. Learn with Nana is about to begin, and this is the first video I'm making on Learn with Nana. Now, in Learn with Nana, I'm going to show you how you are going to catch this movement. We actually raise 0.8. That if you are using the smallest lot size, that's 0.8 cents. $0.8 or 85 cents, $0.8 for this massive move, and it's currently running using the smallest lot. I currently running $3 per position, and we are hoping to hold up to here. Now, this signal was actually sent in my inner circle. So let me just give us a sneak peek of my inner circle right now before we even go on to what we have to do for today. So as you can see in my inner circle, 25th January, I actually made them know. Now, one thing about my inner circle is I don't just send, even before market got there, let me just look for the day began. And we also have a lot of fun. So this is verse 150 before I even got to the zone. I had already marked that once market gets here, we are going to enter. One thing about my inner circle is I don't just send setups and just leave you at bay. You see, enter some signal groups. The signal provider just send a setup and forgets about the setup. But here, I don't do it that way. I send a setup and I make sure we have a lot of fun. And I make sure I monitor it to make sure everyone gets. So when market gets there, I alert everyone and tell you the amount you need to risk and even give you the amount of positions you need to enter. That's if you were a total beginner, you don't have any issue. So entered, market started going our direction. So this is the initial profit when market came in. We had a little drawdown, just a little, and markets went into profit. So we all started holding to market kept on buying and buying. And I actually added some positions. As you can see, I added some positions and simple $30 made. And it's that easy by the grace of God. This is that easy. So I have a good news for you. In this video, I'm going to show you how to trade like a pro. So this is my first video on Trade with Nana. Now, I did a poll in one of my videos to know my kind of audience, and going through the channel, I realized the majority of us already have an idea about forex. So I'm just going to kickstart with the impression that everyone or majority of my subscribers, because I'm making video for my subscribers, and this is to remind you, if you haven't subscribed to this channel, kindly do if you are interested in trading the forex market, because I am going to be dropping videos that are going to help you in your forex journey. Now, if you are new to forex, I mean, if you are a total beginner and you are new, you don't know anything about forex, you can send me a DM. I'm going to send you free videos that you can use to learn the forex market. So if you are new, I'm going to drop my link in the comment section. Just contact me. They are all free videos. I mean, someone who doesn't know anything about forex, send me a DM. I'm going to help you. Now, for my subscribers who already have an idea about forex, who are either trading or started trading and decided to stop, don't worry, I'm here for you. Learn with Nana is going to kickstart. So in our first series, I'm going to talk about the most important thing when it comes to trading forex or synthetic index. That is your market structure. That is the most important thing in forex, according to me. And I'm going to show you a strategy that I have been using to make more than $500. If I'm not to expose myself that much, more than $500 in trading forex. So the first thing I want to even draw your attention to is that you need to focus on market structure. market structure. So this video is going to mostly focus on market structure. Now, before we even talk about market structure, we first need to talk about time frame. And this is where the secret lies. You see, there are a lot of traders who are trading this forex market, but then don't even know the kind of trader they are. A lot of people are trading this market, but they don't know even the kind of trader they are. So to know the time frame you are supposed to use, the first question you need to ask yourself is, which trader am I? Are you, and there are three types of trader. They are a scalper, day trader, and a swing trader. So the first question you need to ask yourself, are you a scalper, are you a day trader, or a swing trader? Now, there is no specific time frame for being a scalper. There is nothing like that. But then I'm going to speak in subject, or I'm going to speak in connection to my experience. So I'm going to give time frames for being a scalper, time frame for being a day trader, and time frames for being a swing trader. Now, this doesn't mean that that is the how do I put this? Doesn't mean that's the generalized standard way in forex. No, there is nothing like that in forex. There is nothing like that in forex. So, according to me, to be a scalper, you need to have you focus on your 1 minute to 10 minutes or 15 minutes time frame. To be a scalper, your higher time frame should be the 15 minutes time frame. To be a day trader, your time frame should span from 15 minutes to the H4 or the daily. The daily time frame. 15 minutes to the daily time frame. That should be your time range. And to be a swing trader, you should start from the daily to the monthly time frame. Or for entries, for the sake of entries, you can actually start from H4 time frame, the H4 time frame. So this is according to my experience, the time frame I think you need to focus on if you are a scalper, a day trader, or a swing trader. Now, who is a scalper? A scalper is someone who doesn't really spend much time in the market. So the person who just gets into the market within, and the person will just be looking for some few pips. But then one thing about scalpers is that they use a big lot size, a very, very big lot size. If you don't know anything about lot size, it means you're a total beginner, and you can, as I said from the beginning of the video, you can just send me a DM on Telegram and I'll be excited to help you out. Now, scalpers look for small pips with smaller lot size, and day traders actually look for more pips to risk little, but then they enter a lot of positions. But then swing trader will risk much more and look for higher pips. And they also use some, depending on your account capital, but majority of them will use a lot size that can sustain their drawdown, but then they target a lot of pips. So their SL is going to be from 100 pips upwards, and their TP is going to be from 100 pips upwards. That's if they are targeting 1:2, then 100 pips for 200 pips. That's what a swing trader does. Now, for me, I am not a scalper, even though I can really scalp, but then I am more of a day trader. So if you are to go to my Telegram channel or my inner segment, you can see that I send signals each and every blessed day, unless of course market conditions are bad. Upside that, I send signal. The moment I see an opportunity, I send it, we pounce on it, we make money, we withdraw, and we are done for the day. The next day comes and we begin. Now, let's move on to what we have to say. So we want to learn about market structure. Now, in learning about market structure, we need to have our time frame. So I've already explained which time frame you need and why you need them. So once you know the time frame you are supposed to use, everything that I'm saying, you're going to repeat it on the time frame. You are going to repeat it on the time frame that I've given. So everything I'm going to do, I'm going to explain in terms of what I do. So me being a day trader, my analysis is mostly on the 15 minutes time frame to daily time frame. So I mostly mark my levels on the 15 minutes time frame. But when I'm not seeing the levels much clearer, that's when I move to the higher time frames. So I'll be able to get the bigger picture of what I am doing. So let's talk about market structure. Now, one thing about the forex market is that it's simple but complicated. Forex is simple but complicated. You can actually make it very, very simple for you or very, very complicated for you. Listen, do you know why forex is easy? You see, we have four type of movement. The first movement is an uptrend. Second movement, a downtrend. We have a ranging market and we have a choppy market. Now, for a choppy market, we don't do anything. So let me just begin with the first one. So what is a choppy market? What is a choppy market? Now, a choppy market is a market that doesn't have any direction. So for example, if you are to open the chart, so let me just open the chart and show us how a choppy market is like. If you are to open a chart, you're going to see, let me just open a chart to show us how a choppy market looks like. So we can be able to really, really trade. All right, so if you are to see my chart right now, this is a choppy market. This right here is a choppy market. It doesn't have any direction. You can see the market moving here, it's coming here. It's just moving in any direction. So with choppy market, that market just keeps on moving anyway. Can just be moving this. It doesn't have any direction. So with these kind of markets, you don't do anything. You don't do anything. You ignore this type of markets. Now, because I want this video to be as short as possible, that's why I'm speeding up. Now, if you really want to break things down and really get the things I do, I'm going to recommend you can just send me a message on Telegram. I'm going to introduce you to my mentorship program where you can really learn everything. But then what I'm going to do on YouTube is I'm going to be dropping snippets. And if you are to follow the videos keenly and attentively, you are really going to gain a lot of knowledge, which is going to help you in your forex journey. So that's how a choppy market is like. Then the next thing is a ranging market. Now, a ranging market, a ranging market is any market that has two major zones. So for example, you're going to see the market will move from the bottom, go up to a resistance, come down, then market to move up, come down, the market to move up, come down, the market to move up. So anytime you see, anytime you see, anytime you see a market like this, you can see that this is a ranging market. Anytime you see markets moving this way, you can see that this is a ranging market. Ranging markets, so for ranging markets, we don't really, there's a way to trade them. There's a way to trade them, and I'm going to talk about that in a different video. Now, let's look at the different set of markets. The next type of market we are going to look at is the trending market. When we talk about the trending markets, there are actually two types of trending markets. That's the uptrend and we have the downtrend. Now, see, understanding this makes your forex journey much, much easier because these things happen like 80% of the time. I mean, 80% of the time, market is either going up or going down. Now, before you can say a market is an uptrend, or before you can say a market is a downtrend, there are certain rules you need to look. So like I've said, 80% of the time these things are happening. The market is going up or going down. Now, when can you see a market is an uptrend, or when can you see a market is a downtrend? There are rules governing a trending market, and it's called the Dow theory. Now, with the Dow theory, for markets to be in an uptrend, it has to keep on making series of higher highs and series of higher lows. So what do I mean? For market to be in an uptrend, market should keep on breaking previous higher highs, but then market shouldn't be able to break previous higher lows. So that's the Dow theory. So market is said to be in an uptrend as long as it keeps on breaking the previous higher highs and doesn't violate previous higher lows. So what we are going to do now is that we are going to identify what a higher high is and what a higher low is. So I'm just going to do a quick sketch for us. So let's look at what a higher high is and what a higher low is. Now you can see what I am drawing. You see the peaks up, you see the point up, this is a higher high, and the point down is a higher low. So what the Dow theory is saying that for we to say that a market is in an uptrend, it has to keep on making these higher highs and higher lows. Are you getting it? So it means a market needs to keep on going up. So you can see that the movement is going up, but the market doesn't break the higher highs and higher lows. Now, I'm really going to stress on that point. I'm really going to stress on the idea that market should keep on breaking higher highs and keep on forming new higher highs, but then not breaking the higher lows, because this is the foundation for market to be in an uptrend. The only way you can say market is in an uptrend is when the higher high that is formed is able to break the previous one. So market will keep on doing that, keep on breaking this. So let's say this is a higher high, then let's say if you are to draw a line or a resistance, market comes up to break that higher high, comes down again. So the moment market breaks it, then when it's coming down, that point becomes a higher high. Down, market breaks, forms a higher low here. So it couldn't break the previous higher low, then market comes up, break this higher high, goes up a little, forms a higher high again. So the beauty about this is that if you know how these things occur, and if you really understand how these things occur, you can be trading each and every day. So I've just given you a very big secret in my trading journey. You guys have been hearing me say I keep on trading each and every day. This is one of my foundational things that I know that is able to cause me to trade each and every day and to send signals to my inner circle each and every day. Why? Because I understand market structure. I understand this so well that I'm able to apply. Now let's look at the downtrend. Now with the downtrend, market needs to form lower lows and lower highs. So one thing about the forex market is that what is said for the uptrend is also said for the downtrend. So if I'm to draw market going down, this is the lower low, then we have a lower high over here, we have a lower low and a lower high over here. So what can you see just by observing? You see, you can see the market comes to form a lower high over here, but the market is unable to break the previous lower high. But then if you are to look down at the lower lows, you can see that market keeps on breaking those lower lows. Market keeps on breaking those lower lows, and the lower highs are intact. And this is what is called the Dow theory. Now, this is what I'm going to do in the video. In this video, I'm just giving you a structural framework. Now, the most important thing I want you to take out from this video is that know the time frame you use. Know the time frame you use. So for you to know the time frame you use, you need to ask yourself, which trader am I? Now, after knowing the time frame you use, you need to understand the trending markets. And I'm going to make a video on the ranging market. For choppy markets, we ignore them. Are you getting it? So you need to know when a market is trending, and you need to know when a market is ranging. So in this video, I've spoken about ranging market and trending market. So you just have an idea about what a trending market is and what a ranging market is. I'm going to make another video. In the moment I get 20 views, I'm going to make another video. And in this video, I'm going to go deep into this. Kindly subscribe and like this video. Ask me a question in the comment section. I'll be excited to help out.